Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Max, and Max writes from Bloomingdale, New Jersey. And Max writes, I applied for a mortgage before and didn't get approved. My fiance and I are looking to buy a home now. Do you have any tips to help us qualify for a mortgage? Well, Max, if you're looking to improve your chances of qualifying for a mortgage loan, I'm going to give you 5 key areas to focus on. The first is your credit score. Credit score is very important. It's very important to lenders because lenders look at your credit score as one of the most important factors in determining whether you qualify for a mortgage and how much money they're willing to lend to you when you get a mortgage and buy a home. So credit score is very important. You want to check your credit score. You can check it with the 3 major bureaus. Make sure that there are no errors on your credit report, as there may be. And if you let them know, if you find them, the credit bureaus are required to fix them. So get your credit score. You want to pay your bills on time, because if you don't, that's going to show up and it's going to affect your credit score. You want to reduce your debts, and you don't want to open any new credit card accounts or get new loans, especially right before or during the process that you're getting a mortgage, right? So first key thing to focus on is your credit report. The second thing is your debt to income ratio, or your DTI, which is the ratio of the debts that you have as a percentage of your gross income. And lenders want your debt to income ratio to be lower because it shows that you're financially responsible, and it shows that you can reasonably afford to pay your mortgage back, because again, they want to make sure that you pay your mortgage back so that they collect interest payments. So they want to make sure that you can comfortably afford to pay back your mortgage loan as well as the other debts that you have. So in order to lower your debt to income ratio, you can do one of 2 things. You can lower your debts by paying down credit card accounts, etc., or you can increase your income. Both will lower your debt to income ratio. Third thing you want to focus on, the third key thing to qualify for a mortgage is your down payment. So the higher your down payment is, the more favorably lenders will look at you, and the less money that you have to borrow. So if you have a smaller down payment, it's more likely that you have to pay mortgage insurance. If you have a higher down payment, you probably won't. In addition, with or without mortgage insurance, if you have a higher down payment, all else being equal, your monthly mortgage payments are going to be lower because you're not going to have to borrow as much money, you don't have to pay back as much money, therefore your mortgage payments will be lower as a result. The fourth thing that you should focus on to increase your likelihood of getting qualified for a mortgage is your employment history. So lenders put a lot of weight on financial stability, and so they think that someone who has the same job for a long period of time is more financially stable. So if you can, you don't want to switch jobs, particularly not around the time that you're looking to get a mortgage. And if you do switch jobs, you ideally want to stay in the same industry, because again, to a lender, it makes you look like you're more financially stable. And the fifth and final key that I'm going to share with you today to focus on to increase the likelihood of getting a mortgage loan is mortgage pre-approval. So mortgage pre-approval is a conditional commitment from a lender to lend you money to get a mortgage. You definitely want to get pre-approved before you and your fiance start looking for a home, because it shows to home sellers that you are a serious buyer, because again, you're competing with all the other buyers when you make offers on a property. So you want to get pre-approved for a mortgage. And so you need to be ready with documentation in order to get pre-approved to expedite that process. So proof of income, assets, and your debts. So thanks for your question, Max. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.